Yo traders, what's poppin'? Welcome to the channel. Now I've noticed that a lot of you are loving these MambaFX strategy videos, so I'm gonna keep doing them. So make sure that you sub up, smash the like button, and come back and keep watching them, because I'm only gonna keep dropping knowledge every single week. I'm literally gonna go over everything that I can today, from top to bottom. If you watch MambaFX a lot, you also know the three main pairs that he uses is NAS100, US30, and gold. Recently, he's been really sticking to US30, but I do see him go back and forth between NAS and gold. For today's video breakdown, I'm just going to use NAS100. So now you've got your pair, you need to know what time you're going to be trading. You only want to be trading one certain time of day, and that's the New York Open or after the New York Open. You don't want to be trading before it. We're only trying to catch breaks on the Open or after the Open. And I'm going to show you what to do if it goes against you and you get faked out on the break of the Open. So just stick around and watch. So the first thing you always see Mamba do pre-market open. What is he doing? Well, I'm on the 5-minute time frame. This is what I'm trading. I'm not going to go no higher. I don't need to go to the hour. I don't need to go to the 4-hour. I don't even go to the 15 or the 30-minute. I'm just sticking to the 5-minute time frame. So I can see price. It's just coming down, okay? So I'm expecting it to break to the downside on New York Open. So what do? I'm just going to draw a channel or some lines. Anything that makes sense that you think as soon as it gets broken, you can enter the trade. Put a little box, put another little box. And I'm pulling it from this area because there's structure there. So if I was to pull this all the way over, then it lines up. It's bounced from it before. It's broke underneath it, and now it's back above it. So I'm expecting on the New York Open for a break down, but you should also be ready for a break to the upside too, because anything can happen. It gets really volatile, but I'll show you what happens when we get faked out. So this is 5 minutes before the New York Open. We've already broken out of this channel. We've come back up, we've retested, and we're dropping again. As soon as I see this line get broken, I'm going to enter on the break. There we go. I'm already in at this point. I am in. Now it's up to you where you want to put your stop loss. Do you want to put it above the candle, or do you want to put it above the next candle? But when you're scalping, you really want to just be in and out the market. So you want it as low, as little as possible. So for me, I always like to just put it above the candle, the one that's broke structure. So now if you just got out on this one 5-minute candle, that's a 5. It's a beautiful trade. I don't even need to see the rest and see what's going on. I've already got my trade. If you want to be greedy and stay in it, you can, but it could reverse. In this case, it just melted. So yeah, that's like a 13. And this ain't no joke. This is literally how it happens. Look at that. Sometimes it just keeps going. Right now, that's a 22. And you think that I'm making this shit up? I really ain't. And I'm going to show some live examples. Every single time I hit a trade like this, I'm going to post it on my YouTube. So make sure you subscribe and like the video, because I promise you, I'm going to show you results like this. This strategy changed my life. I'm going to show you how you would have trailed your stop loss. Let's go over this trade. What happened? We was in this down channel, and then we created this. All we were doing was looking for this little wedge, whatever you want to call it, to get broken. As soon as it got broken, it pulled back, and it was just retesting this area. This area now would be resistance, because anytime price is bouncing from this area, then it's support. As soon as it's underneath it, it's resistance. So it came up, it rejected again. All we was waiting for was this line to be broken. So as soon as you get a breakout like this and a pullback, you draw your little line. That's all you do. It's up to you whether you want to draw the line from the candle body or the candle wick, but I'd always use the candle body. As soon as price started breaking, you get in, and that's it. That's just literally how it happens. So how would I trail my stop loss in this situation? You know, you need to be really aggressive with it, but if you're going to want to stay in these long trades and actually catch them and win, you need to make sure that the stop loss is always above structure. So these wicks, you'd put your stop loss there. And then when it goes down and it makes more structure again, like there, then you'd move your stop loss there. And you just keep doing that. Every single time there's a pullback and a little bit of structure, you'd move your stop loss there. You'd move your stop loss there. You'd move your stop loss there. I'll keep playing and see where we get stopped out. There, we get stopped out there. So this trade would have ended at 22. Now let's move on and let's take another trade. Let's just let it run. I'm just going to let it run. And I'm not going to cherry pick no trades. I'm literally just going to let it run. Alright, so let's mark up our New York session open. It would be there. So what are we looking at right now? Well, I'm seeing consolidation. I'm seeing that there's not a lot going on. But remember now, step one, what are we doing? We're going up. So remember now, it don't need to be perfect. There's no science to this. We're just going up. We're just in an up channel. Literally. Wherever you want decide to draw your channels is up to you. But what are we looking for? Breaks to the upside. What am I seeing? Well, I'm seeing that price rejected there. Then it came back. It rejected again. So I'm looking for a break through it because we're going up. So as soon as I see a break of this area, I'm in. I'm not even waiting. I'm not even thinking about it. If I lose, it's cool, I lose. But the wins are always going to cover your losses if you use right risk management. Boom. As soon as I see the break, I'm in that break. Stop loss below these little candles, this little bit of structure. I'm in this break. And I don't know how far I could go, but literally you could target a 3 if you didn't want to be greedy. TP smashes, takes you all the way to a 4. Takes you all the way to a 4 before coming back down. Second trade in a row, and I didn't cherry pick it. I'm just going to let it run. And I'm going to show you how we deal with losers too. And if you even re-enter when you lose. Okay. So I actually have no clue how these trades are going to play out. I'm just going to go as if these are live markets and what I would do. So when you get this major volume, usually I like to see price consolidating like this, because then you know you got a better chance of a clean break to the upside or the downside on New York Open. But when it is moving like this, all you can do is mark up what you can see. So remember the first thing we were doing, what was we doing? We're on a 5-minute time frame. We're looking for a channel. Where are we going? Are we going down or are we going up? I can clearly see that we're going down. So I'm going to get my lines and I'm just going to put them there just for my own psychology to know. I'm probably looking for a break to the downside, but if we break to the upside, then we'll deal with that when it comes to it. But right now, we're in a channel and we need a break above this, where price got pushed down, or a break below there, where price got pushed up. That's all you're doing. Right, cool. So you could have got stopped out there. Let me show you how. This is how you could have got stopped out, because when price broke through, let me get rid of this white line. When price broke through and wicked through like that, you could have got stopped out because you would have just entered on the break, right? Entered on the break, boom, you get stopped out because price like pretty much instantly comes back up. So what would I do in this situation, knowing that I just got stopped out? Let me tell you what I do, because my rules are 2 losses a day. That's it. If I lose twice in one day, I'm absolutely done. But if I win once and I get a 1 to 3 minimum, I'm also done. So you got to think, if you're risking 0.5% or 1% max on a trade and you lose twice, the most you could lose in a day is 2%. But if you're risking 1% max on a trade and you get a 1 to 3 minimum, then you get 3%. So you're still profitable in the long run. That's what counts, all right? So boom, you lose. That's cool. Because what did it do? Well, it left this big wick. Now, when I see these big wicks, they're lovely signs to tell me price doesn't want to keep going down. Prices come back up inside now, and it's probably going to want to go up. So as soon as that happens, I'm entering on a buy, and I'm literally putting my stop loss below the wick. Needs to be below the wick. This is just to try and get back what you've lost, maybe a little bit more. Boom. Look what happens. You put your stop loss below the wick, price comes back down a little bit, but shoots up, and it would give you back a lot more than you lost. So remember, if you get faked out on a breakout and it leaves a wick, it needs to leave a wick, because if it doesn't leave a wick, then the chances are it's still going to go down. You just got stopped out. It needs to leave a bit of a big wick like this, just to let you know that it's taken some liquidity, or AKA it's taken people's stop losses. So when people bought to push this price up from this area, they put their stop losses there. This is where they put their stop losses, this box. So somewhere in there, someone's stop losses was there. And this wick came and took the stop losses. That's why you enter after seeing a wick like that. And price pulling back up inside and back above this support area. You put your stop loss below the wick. Boom, you buy straight back in. And all you really want to do is get back your loss and maybe a little bit more. So you just risked 1%, you got stopped out, you lost the trade. All you wanted to do was get back your 1%, or, you know, get back your 1% and an extra 1% on top. Instead, it works out, you get back 4%, and I don't even know how far it keeps going. There we go. That's how you work with being faked out. So let's move on. Remember, I'm not cherry picking these trades, I'm just letting it run. So before we even get to the 230 open, I'm just going to place that there so I don't go over it and I can't predict what happens before I did. All right, cool. So what are we doing? Well, if we draw our little channel, we're going up. So what am I expecting? Well, I'm expecting a break to the upside. But if you look to the right, what's this? Red folder news. So price can be very unpredictable. It's up to you if you want to be trading on news days, which is, you know, very risky, but we'll still see what happens. We'll still play this trade out and see what happens. But it was clearly just going to draw a little support because it bounced from it. Then when it's above it, it bounced from it again. So now that's a resistance turned into a support. Then we had this other area. It's already broken before the market opened, but we still put it there. These are like building blocks. Just put them there. Price is respecting them, is stepping on them. We just want to see some sorts of breaks. So boom, look what happens. Honestly, as soon as you get this break, you're already in. You could have put your line there, and if it broke to the downside, then you would have just sold, but it didn't. It broke above, and yeah, like I said, it just bounced off of this support. As soon as you see volume like this, you could have either got straight in, or you could have got in on the break of the trend line, or whatever you want to call it, a channel. You just get in when there's volume. Stop loss below the wicks, or as tight as you want it to be, but that's always the safest option because price does come back down pretty quick. In this case, it didn't. This is the power of the MambaFX strategy. I ain't making this up. This is his strategy, it's not mine. It's just a breakout strategy I'm showing you, literally. And I'm not cherry picking, I'm just letting the chart play. When we hit a loss, we hit a loss. Okay, so I can already see there's more news again. 3 o'clock. But I'm still going to just play this trade out and see how it happens. Okay, so at this point, price is kind of consolidating. I wouldn't say that it's bullish or bearish. But if I had to say, is overall direction still looks down to me. So I'd say that we are coming down. But because of this big push, then you get this wick. Pre-market open. Always look for these wicks. These wicks will tell you a lot. Now, I don't know if price is going to shoot down or up, but that wick would make me nervous. So this is clearly an area that have broken before the market open. We call them pre-market breaks. So the only thing we can do now is draw a box there and see what happens. We'll see where we break. Okay, remember now, this is a perfect example of what I told you before. So if you entered on this break, you would have lost. But you're risking 1% or 0.5 is cool, because what did I tell you to do? As soon as you go back, as soon as price pulls back like this and leaves this wick, what are we doing? We're buying straight back up in. We're getting back inside. As soon as we close up in there, putting our stop loss there, and we're just trying to recover our loss. That's all we're trying to do. So we recovered our loss. Could have earned a little bit more profit. And it carried on up. So we potentially there with our wick, we could have covered our loss and earned another 1% on top of the loss that we took. So that's a few 5-minute examples, but that's why I told you that 5-minute is the best time frame for me, because if it fakes me out and it leaves a wick, then I pretty much know that it was a liquidity sweep and I'm just going to want to go back in the opposite direction. But always place your stop loss below the wicks if you're buying back in, because price can easily come back down. But look, you recover every time, pretty much every time, because trading sometimes is nasty. That's why you have to set yourself limits, like 2 losses per day max, even 1 for beginners. If you're an absolute beginner, just take the 1 loss. Discipline is what makes this strategy great. Mamba would tell you himself, you can't be gambling like what you see him doing on his new videos lately, is buying, selling, making 20 grand every couple of seconds because he's got like $1 million in his account. He can do that now. When he was hustling, grinding and trying to make it to the top like us at the beginning, he was trading like this. He was trading smart. This is the real MambaFX strategy that I've known him to make his wealth from. Not just clicking buy or sell and being out in 30 seconds and making $20,000. That's not how it works. You need to be holding these 5-minute. Now I'm going to show you when you should be looking on the 15-minute time frame. So I only really look on the 15-minute time frame when I've already entered a trade on the 5-minute time frame and it's going in my favor, and I want to see how strong the 15-minute candle closes. So for example, we entered on this trade on the 5-minute time frame, right? So we go back, we had the up channel, we had this break. As soon as it broke, we entered, right? So we entered on a 5-minute time frame, but I wanna then go to the 15-minute time frame, because right now it's on bar replay mode, so it doesn't look the same as when it's actually playing out. But you want to see how the 15-minute candle ends, and it ended like this. This is when I go to my 15-minute time frame and I'm just looking and I'm watching the candle like getting bigger, then getting smaller, then getting bigger and smaller, and then I want to see how strong it ends and how much of a wick that it leaves. When it ends like this, it's up to you then to decide, right, am I going to stay? Did it end really strong? Did it end really weak? Well, it ended pretty strong still, so, you know, there is still bullish power there. And then, boom, the next candle again ends pretty strong. So this is on you now, where you put your stop loss. You know, remember, if you're putting your stop loss halfway up the 15-minute candles, your stop loss is there. Now your stop loss is there. Boom, you'd be stopped out there. This is where you would have got wicked out. So the trade would have been a 7. So that's when I use the 15-minute time frame. That's when I use the 15-minute candles and why I use them. Okay. So what can I really talk about next when it comes to a strategy? Let's talk about the 1-minute time frame. So let's see how we would have played this out in the 1 minute. The 1 minute's where you can really get your razor sharp, close sniper entries, they call them, okay? But they're also the riskiest time frames because of how volatile they are. But look at this. This is where you can really get down to the detail. We knew that we was bullish by putting our channels there and knowing, okay, we're going up. We're overall going up. Soon as you see this break on the minute, literally, this is where you could get your sniper entry. This is 1 minute before the open. Next candle is the open. So we've already broke. We need to see what happens. Well, the candle comes down, but it doesn't break the downside to the channel. It doesn't break this downside, so you wouldn't have entered for a sell. You'd only enter for a buy. When it comes back up and it breaks the channel again. So it came down initially on the open, didn't break the channel, but as soon as it came back up and it broke out of this channel, you're entering. You're just entering on breakouts. And this is where your sniper entries could have been absolutely as tight as you want them to be. Below the candle body, or below the candle wicks, or below actual structure. But you could get a sniper entry like this. And this is where you could really maximize your profits. This is where sniper entries came from. Like, this is the whole meaning of it. The 1 minute time frame. 22. Understand what that means. A 22. It's insane. It's absolutely insane, but it's real. And that's the point of these videos. Like, honestly. So another 1 minute example. What you want to see on the 1 minute time frame is, remember now, even though the first thing you always look for is overall direction of where we're going. Remember, you don't have to be perfect. You don't have to line these lines up to, you know, any candles and get too technical with it. Just do it for your own clarity. You're going up. We love to see this consolidation because, you know, when we see a consolidation like this, it means price is gonna boom. Like, remember now, even if you get faked out, it doesn't matter on the open. If you get faked out and wicked out and, you know, you lose your 1%, the chances are when you enter in the correct way, you're going to absolutely get back everything that you fucking lost and more. So to see how it would have played. Well, that wouldn't be a break. You need to see some momentum. This is the first 1 minute candle. Is whichever way breaks with the most force. All right, still not an official break. Like, we kind of broke out. If you want to put a buy order there now, you could. Putting your stop loss there would be quite stupid. I'd put it underneath the consolidation, and you know, you target in 1 to 2s, whatever. Previous structure if there's any. We're on a 1 minute time frame, so remember now, things can move volatile. Okay, so it starts taking off. Boom, you're already at break even now, literally. So the trade played out and started consolidating around about there. So you probably would have hit a 4. Do you know what I'm saying? You love to see these consolidation zones. It means price wants to move somewhere pretty quickly when it does break. So I've give you a few examples. I'm going to do more videos on sniper entries and things like that. But I'm just giving you these basic videos for a sec. Just because I'm working on a course. And the course is going to be literally how to scalp like MambaFX. So just stay tuned for that one. It's going to be free. Yeah, I'm going to be doing it for you lot. I'm fully locked in right now. I'm not on no social medias. I just need to be ghost mode and making these videos. And I hope that you can appreciate that.